What's up, everyone? It's Caddy with Money Vesting. In this video, we are going to be talking about Apple stock. And there was a catalyst that came out earlier in the week that talked about how Apple's Mac shipments have fallen over 40%. So I'm going to cover that and then talk a little bit about the intrinsic value for Apple as well. Right now, it's trading at a little bit over $160. But with your help, we're going to calculate exactly how much this company should be worth and what's the fair value on this stock. So we're going to use a very simple, data-driven, fact-based analysis. And I'm going to ask you a lot of questions, so comment them down below. And let me know what you think about the analysis as well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. 16% annual discount available till the end of the month. And you can get access to all the buy and sell alerts, options alerts, trade ideas. Everything is going to be included. So this was the catalyst, came out earlier this week. So Apple's Mac shipments fall more than 40%, worse than major rivals, which definitely on the surface is a little bit concerning. So Apple's worldwide computer shipments fell 40.5% year over year in the first quarter 2023, which Apple will report the earnings for at the end of this month. And Apple's worldwide PC market share also dropped in the first quarter 2023 from 8.6% to 7.2% according to IDC data. And the company shipped 2.8 million fewer devices year over year in the first quarter 2023. So if you consider like how much a MacBook is actually priced, right? I have a MacBook, I have an M1 from 2020, and I bought this, I believe for $1,500, might be even around $1,600, might be around those prices. So if you do the math here, we're looking at 1,500 times 2.8 million, right? That is going to be $4.2 billion of revenue for the company that's lost because they pretty much delivered 2.8 million fewer devices in the first quarter 2023. Now, this is not that big of a problem because, majority of Apple's revenue comes from iPhones, right? So MacBook is definitely a very significant, brand from a branding perspective. From a devices perspective, yes, MacBook is a pretty big deal. But from a revenue perspective, it is really, really minuscule compared to the company's actual revenue, right? So iPhone is what is the main driver for the company's revenues of $65 billion in the first quarter 2023 fiscal year is what Apple generated in revenue compared to MacBook's $7.7 billion, which was already down. So on a year-over-year basis, they were both down from same time last year in 2022. This right here is the first quarter 2023 versus first quarter 2022. And of course, we learned that net sales were down a little bit, down to $117 billion for the company. So I'm not super concerned about the Mac sales being down 40%. Yes, it's going to be, be reflected in the actual revenues and the earnings. And Tim Cook also mentioned, I think, that the macro environment is not looking super great. So it's not entirely unexpected. And CFO Luca Maestri said that in February that Apple expected double-digit declines in Mac and iPad sales from the year earlier. And Mac revenue fell 28.6% over the year during December quarter. And Apple CEO Tim Cook said that at the time, the challenging macroeconomic environment affected iPhone, Mac, and Apple Watch sales as well. So these are very discretionary spending, right? So I mean, if there's any chances of a potential recession being hit, the first thing that people cut off their budgets are discretionary spending, right? Pushing back the purchase of a new MacBook, pushing back the purchase of a new iPhone. Those are the first things to kind of cut off because people gravitate a little bit more towards necessities. And that's where utility companies come into play. They're more defensive in nature. But like I said, for Apple, MacBook wise, I'm not super concerned. It's a very, very small, significantly small portion of the revenue. It's only 7% versus iPhone, it's over 56%. So if we actually start seeing iPhone revenue decline substantially, that's when I'll be a lot more concerned with Apple, and of course it's significant of its business and where it's at with its user base, right? So over 1 billion install base. I think it's closer to 1.1, 1.2 billion right now. So for this MacBook, not super concerned. What I am concerned though for Apple right now is the valuation, right? Where does it actually currently trade? And I know I'm gonna get a lot of comments, down below that Apple's fine. I mean, valuation's fine. Apple's gonna go up to 200, 250. Like Apple's a very strong business. I totally understand. I totally get it. Apple's a phenomenal business. I own pretty much all Apple products. Love the company. But again, we always come down to this argument or this discussion, not really an argument, a discussion or this debate. Regardless of how great the company is, we still want to be aware of the valuation that it's trading at. And again, I'm going to run through some numbers for you, right? So we're going to be doing a very data-driven, fact-based analysis. And if you still kind of disagree, I would love to know why. Because again, at the end of the day, it's going to be that discussion which is going to help us improve our blind spots and really help us learn and grow together. So valuation 27, 26 is what we are trading at, price to earnings basis. Price to sales is actually very much in line with what we have seen with Apple before. 6.6 and a 5-year average is 5.7, and enterprise value to EBITDA at 19, closer to 20 levels, and not to mention price to cash flow at over 23. So if we come over to the analysis here, and 2022 we had a net income of just under $100 billion for the company. Share count is sitting at over 16 billion shares, and the company's been buying back shares every single year. Like they've been plowing money back into share buybacks every single year by about 5%. So that's a compounded annual rate at which the company Apple has been buying back shares. So I'm going to plug in negative 5%. So that's going to be minus 5% in share buybacks. So our share count goes from 16 billion down to 12 billion by the year 2027. Now, analysts are expecting EPS to drop down to $6 this year and then grow to $8.58 in the year 2028, and then all the way up to $13 by 2032. So if you take a look at that compounded annual growth rate for Apple, it's a 7.5% to as much as 9.3%, okay? That's the compounded annual growth rate for actual earnings per share. Now, of course, nobody really knows what earnings per share growth rate actually is going to look like. I mean, we've got Apple Services, which is a very high margin business. If that can really, accelerate to the upside, right now only makes up about 18 to 20% of the revenue. If that actually accelerates to the upside, it's going to be higher margins, higher profitability. Then we've got Apple Glasses. I mean, they're going to potentially get into metaverse, AI, artificial intelligence, augmented reality. There's a lot of potential opportunity for Apple over the long term. So they can certainly grow at a much faster rate. However, the one thing you have to understand is that as numbers get bigger and bigger, the growth rates are not going to be the same. Apple from 10 years ago is completely different than Apple today, right? The growth rates 10 years ago, 20 years ago for Apple was, maybe 50%, 100%. Now, we're lucky if they can grow revenues by 10%, right? So that's the big change in Apple. It's a very mature business. It is a very sustainable business. It's a very profitable business, but the growth rates are not the same. And the markets are nothing but basically a multiple of what the future expectations are for the price itself, for the cash flows, and for the company itself. So I'm going to be generous here. I'm going to go with a little bit closer to 15% in growth rate. So I'm going to actually almost double the growth rate on a 5-year basis. So instead of 7%, I'm going to go with 15% growth rate. The P multiple, I'm going to go with a little bit higher. So going to go with 20 times price to earnings multiple, which is going to be lower from its current levels of 26, 27. Again, let me know in the comment section down below if you disagree or agree with that P multiple. Discount rate is going to stay put at 12%, 10% margin of safety, share dilution negative 5%. And if you plug in that 20p multiple, we get to a fair value, which is exactly the same as the price right now at $163. But again, you have to keep in mind that I am going with a twice the growth rate in earnings per share for Apple at 7.49%. Now, if I go over to, very quickly, if I go over to the actual Seeking Alpha website here, and what I'm going to do is I'm actually going to go over the last 5 years worth of EPS growth. Okay, so just doing some historical analysis as well. So we're going to go over to financials, and we're going to come down here. We're going to look at diluted EPS. So diluted EPS over here was, let's just see, 2022, $6.11. So we're going to plug that number in, 6.11, and this is in 2022. And 5 years from that is going to be 2017. So let's just come back and look for 2017. 2017, the diluted EPS was $1.91. Actually, it was $2.30. So 230 was that number. So what we're going to do is we're going to do 230 here, $6.11 here. We're going to do 2017 and 2022. So 21%, right? So you can see that they have been able to grow their earnings per share by 21.5% in the last 5 years. And a lot of it has come because of, well, you guessed it, share buybacks, right? Share buybacks. If it weren't for share buybacks, their EPS would not have grown at 21%. It would have been a lot lower because they are literally plowing money back into the company. Negative 5% is the actual share dilution. So I'm taking a very conservative estimate. In fact, if you take a look at my estimate here, it's actually not 15%. It's going to be much higher. Why? Because the share dilution is factored in. So if you come over to 2022 and put in 2027 over here, and we put the number actually it's going to be $5, or let's just go with 611. And if you take a look at the EPS estimate here, 1589, that's going to be also a growth rate of 21%. So it's not really 15% that I'm pricing in. It is instead 21% accounting for the share buyback the company is doing. So the key really is share buyback, right? Even if you go with, let's say, 10% here, now we come down to a fair value of $129. And that's going to be, let's just see, a growth rate coming down to 1272. So that's going to be a growth rate of 15.79%, including the share buyback, which I think is a lot more reasonable for the company, right? 10% growth rate for Apple in terms of earnings. And when you kind of tag on that share buyback, it's going to be closer to 15.7%. Now, coming over to the technicals, Apple is having a very strong day, up another 2%. This right here has been the downtrending channel, or the lower highs and lower lows within which Apple's been trading at. And we've got a resistance sitting at 177. So that's going to be a level to watch, and support level closer to 158 for the company. It really comes down to your expectation of growth in terms of earnings for Apple. In terms of net income, do you expect them to grow 10%, 15%, 20%? This is going to be that sensitivity grid. And again, you can do the analysis yourself. You can figure out, what is going to be your growth rate and what's going to be your P/E multiple. And depending on those numbers, you get a fair value on Apple stock. For me, it's going to be a lot closer to $129 to $130. I do still have a very, very small percentage of Apple in the portfolio, which I'm going to be planning to trim or sell at closer to $177, or even as much as high as $200 per share. So let me know your thoughts down in the comment section below for Apple. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon down below. As always, happy investing, and I'll see you all in the next video.